Hello everyone and welcome to AMG Consulting Group. My name is John Wanjiru Mora. I'm the Business Development Officer at AMG, and today we'll be having a very special guest, that is George Amolo, our Managing Partner.
Thank you very much, Joanne. Today we'll be discussing a lot, quite a lengthy conversation about the business dynamics in not only in Kenya, but in East Africa. So first things first, we'll discuss about AMG Consulting and what it does in the marketing space, in the market space I mean, and then we'll also look at the tax dynamics in Kenya for today, but next time we'll look at the tax dynamics in both Kenya, Sudan, and the East African region at large, because that's where we operate from. Just to delve into that straightforward, AMG Consulting is a finance and management consulting firm that was established in 2015, and to be exact, on 1st of October of 2015. So today, John, we are clocking 10 years, so to speak.
Oh,
we are not. Thank you. We are not a young firm now. We are mature in the market. We started with Kenya, Joanne, and then we moved to South Sudan, and we also have a satellite office in Somalia. But we're looking at setting up an office in Uganda, in Rwanda, and also in the Democratic Republic of Congo, being members of the East African community.
So, AMG, maybe for those who don't know about AMG, George can tell us who we are in the market,
Yes.
and what we offer into the consulting and what it is.
Thank you. Our value proposition in the market is audit, which is our core business, but we also do tax consultancy. Remember, Joanne, tax has become a very big challenge for most businesses in not only in Kenya, but in the East African region at large. So we do a lot of tax consultancy. We also do what we call financial management advisory. So we'll walk into your firm and look at your financial management and give advisory on areas that you can review, re-engineer to be able to turn profit to your business as fast as possible. We also do management systems, and in management systems we have a payroll system or a human resource ERP that tackles human resource from the point an employee is onboarded to the point they exit. So the system tackles onboarding, it tackles payroll, it tackles appraisals, it tackles check-in and check-out. That is for the staff. It tackles also annual reviews. I've talked about that. And the beauty with that system is that it encompasses, or it has looked at the human resource dynamics in all the East African countries. And maybe in future we'll be looking at the African continent at large. Also in our financial management or in our systems solutions, we also have an accounting ERP that looks at the general accounting value or general accounting systems in an organization. We'll discuss that when we go to our ICT offerings, Joanne.
Yeah. All right. You've mentioned that you do financial advice. So can you kindly tell us who are your clients specifically? Do you just focus on the big corporates? Because when you say financial, Wanjiko in the market might think, I am not part of their clientele. So can you kindly tell us the type of clients that you work with?
We not only concentrate on corporates. Our spectrum is broad, Joanne. Yeah. We handle corporates, we handle SMEs, and we handle what we call the micro SMEs. When I talk about corporates, then corporates are the companies that do annual turnovers of $1 billion plus. Yeah. So we have $1 billion, $2 billion, $3 billion, or even $5 billion. That is a Kenya shilling equivalent. In dollars, then those who are handling maybe $2, $3, or $4 million in turnovers per annum. And then we have the small enterprises or small and medium enterprises, those who handle turnovers of between $500,000 to say $1 million. Yeah. That is something between 50 million to 100 million. Then we have the micro enterprises that now operates from zero, say, to 50 million Kenya shillings. That is, say, between 0 to 500,000 USD. So our clients, I can say, is we handle all types of clients, even individual clients, those who do groceries in the market. We handle all that, and all of them are welcome to come and transact or come and consult with us.
Maybe George, you can tell us the market challenges in the region right now, and how AMG is coming in and solving those problems. Because I know it's not just affecting the big companies, also the small ones. Yeah, can you briefly explain to us how this goes around and how you come in and bring the problems?
Joan, looking at the market space, especially in the East African region, and more specifically to the Kenyan country, our country as Kenya, business people face a lot of challenges, and therefore it requires requires a lot of resilience and a lot of thought process to be able to navigate those challenges. One of the major challenges is access to finance. I know Kenya made a very big stride in terms of access to finance, but most business, especially small and micro enterprises, still have challenges in trying to access finance. What we've done is that we've partnered with so many commercial banks in the country and even out of the country to try just to bridge that gap effectively. We might not have done as best as we want to be, but that's a step in the right direction. So what clients need to know is that as long as they have a good business idea, then looking for capital is the easier bit. Getting a good business idea that you can sell to a lender is the harder bit, and then now you come to looking for that finance. So that is one area. The other area that challenges most corporate, even SMEs, but majorly SMEs, is when it comes to record keeping. Remember, when you go to a financial looking for finance, then they'll ask for your financial records. Most companies or most SMEs don't have proper record keeping as a system in their structure. The way you come in is we try and model your financial function so that you can have proper record keeping in your company, so that when you ask, then you can in a click of a button, you can see your sales month by month or year by year. You can see your expenses month by month or year by year. You can see all your financial parameters at a go. That solves two problems. Number one,
before you continue to that, when you say financial record, because most of the people may not understand what actually financial record is. Can you briefly tell us what it is and what it means?
Thank you, Joanne. Financial records in a nutshell is your day-to-day revenues and expenditure. Vile unapata pesa yako on a day-to-day and how you spend it. Vile unatumia hiyo pesa yako in the market. For example, if you are a groceries, if you run a groceries shop in the market, you must go to Nyamakima, or to not Nyamakima. It's called Marigiti, is it? To buy your groceries in the morning, early in the morning, and then that is your purchase. Then in the course of the day, you'll be selling now to your customers. Those are your sales, is it? So when I refer to financial records, then it is a report that shows that today, the 20th of September, I went to Marigiti and bought groceries worth, say, 10,000. That is your purchase for that day, is it? And then I spent 200 shillings on transport, and maybe another 100 shillings for my breakfast. And then in the course of the day, I have sold, say, 12, 13, or 14,000 to my customers. So for that particular day, my financial record shows that I have sold 12,000. I have spent during the day in my lunch, transport, and XYZ is 1,000 shillings, and then my purchase were 10,000 shillings. So my total expenditure for that period is, say, 12,000. If I had a sale of 14,000 and all my expenses are 12,000, then I have a profit of 2,000. That is what a financial institution will be looking at to see, is this business worth being funded? So sometimes most businesses, they just have that in their mind, but if they're told to give that record, they're not able to give that record. So mostly that is what any financier would want to look at before they give you a facility or give you a loan. That's what I was talking about when I referred to financial records.
Okay.
Yes,
I
yes,
think
yes.
that's the question most of our viewers are asking.
Correct.
What is a financial record? And how do I keep a financial record?
Correct.
Yes,
Thank you.
So
Thank
maybe
you.
we can now proceed to the challenges.
The other challenges that we are talking about.
The other challenges and also how you are coming in to solve them.
Apart from financial records, they are what we call value chain. When I talk about value chain or supply chain, what I refer to it is I want to sell electronics, Johan, say in Nyamakima, for example, but I don't know where do I get these electronics from. How do I move them from, say, South Korea, from China, from the US, from the UK to my go down in Nyamakima. So that value chain is very, I mean, that supply chain is very important for any business a person. How do I deal with imports? How do I deal with import duty at Mombasa? How do I deal with all that? So that by the end of the day, I have my product in my go down at Nyamakima. I know as AMG, we don't quite, we've not quite invested in that supply chain, but what we do to our clients is to refer them to players in that space that they can partner with so that they can get their wares from the source markets eventually to their go down scene in Nyamakima, in Kirinyaga Road, and all that. But maybe soon, you never know, Joan, maybe we might want to venture into that space so that we assist our clients to be able to get to shorten that supply chain as efficient as possible. So that is another challenge that most businesses experience, especially in Kenya. And when I talk about Kenya, if you look at the markets in Kenya, Uganda, Tanzania, South Sudan, Rwanda, almost our markets are almost the same. So the challenges that a Kenyan entrepreneur will be facing would be the same as a challenge that an entrepreneur in South Sudan, in Uganda, or in DRC Congo would be facing. So I know the cut across. The other challenge that I would want to speak about is taxation. For a long time, most of our entrepreneurs have not understood much about taxation because initially, especially in Kenya, the enterprise that used to pay corporate taxes, let me go to corporate taxes. And when I talk about corporate taxes, is the tax that a company pays at the end of the year. When they have made XYZ profit, wakisema we have done tumerudisha pesa kiasi hii as profits for that period, then the revenue authority requires a 30% of that money. Initially, what used to happen, Joanne, is that the big corporates that were the ones paying the corporate tax, the smaller SMEs just used to fill in the income tax return and take it to carry. They didn't understand the nitty gritties of corporate tax. But these are since evolved. Yes.
Because you said the employee, initially it used to be the corporates, the big corporate paying, and then the small ones used to just fill in. So my question is, is this taxation burden affect the employee? Is it does the burden land on the employees or it's just on the employer's side?
I was getting into that, John. I was telling you, initially the big corporates are the ones who used to pay the corporate taxes. But remember, currently the government has been very aggressive in trying to increase the tax base. When I talk about the tax base, if initially we only had maybe 100 corporates paying tax, then now the government is employing all tactics to ensure that each and every citizen in Kenya or for other jurisdictions for that matter, who is earning an income is able to pay a cent or something back to the exchequer. I remember the saying Jesus saying, pay to Caesar what belongs to Caesar. Yes. So at the end of the day, Caesar requires something, or Caesar requires a pound of your flesh at the end of the year. So you need to know that if I have made XYZ amount of money, how much belongs to Caesar or how much belongs to KRA, so that when you're eventually filling in your tax returns, you don't underpay or you don't overpay KRA. Sometimes the risk that most corporates or most SMEs run is that you just fill in your records with the taxman without knowing how much is due. So when KRA one day, maybe 2, 3, or 4 years down the line starts to review your taxes, then they tell you that this year you made this amount of money, you didn't pay, or you paid less. This other year you made this money, you paid less. This other year you made this amount, you paid less. So your total tax bill for this year is 50 million. If you're not prepared for that, then you find you run into serious tax problems with the taxman, and some companies have gone under just because of that. Remember, Joanne, I know this was in public space, so we can mention it. Remember, Karachi Breweries went into challenges with the taxman. So I know it's a case that we are still having between them and KRA. But for a company that is forward-looking, you don't have to reach that space where you are casing between you and the authority on the taxes you need to pay. You need to plan yourself in such a way that you know how much is supposed to be paid, and you make sure that it is paid. If you made a loss, then you don't have to pay any tax. So that's one of the key areas, or key risks that businesses face in the region, or in Kenya, so to speak.
As you said, sometimes you can underpay or you can overpay.
Correct.
Yes. Does that also happen to personally as a person, or just to companies? Do we also get to underpay or overpay our taxes?
I was coming into the personal income tax space. Corporates pay what we call corporate tax, or income tax on profits, but employees pay what we call pay as you earn. The advantage with employees is that KRA picks their tax before they are paid. You'll find an employer who deduct your taxes before they give you your final check at the end of the month. It makes it easier for employees, but it has a disadvantage. The disadvantage that it has is that you don't have control over the amount of money that you pay to KRA, because it doesn't come into your account and then you pay to KRA. What happens is your employer deducts it up front. Remember, John, that the current government has come up with several, let me call them taxes or statutory reduction on employees' pay slips. Initially, we used to have pay, we used to have NHIF, and then NSSF. NSF was just 200 shillings, remember. But currently, we've had quite a number of additional statutories. We have pay as you earn. I'll delve into that into detail. We have SHIF, which replaced NSSF. We have it's called Shisha. Is it called Shisha? I know the Gen Zs are calling it Shisha. I know it is called SHA. Yeah. The social health insurance, and then we have housing levy that was introduced the other day. So when you're looking at your payslip at the end of the month, Joanne, I know you have a payslip now. You need to look at that, and maybe you can flip and say, maybe government should take the salary, you get the taxes. But how do employees manage that? The way as AMG we propose, the way we see the future is that employees should now start negotiating on their net pay as opposed to the gross pay, so that I know that if you agree with my employer that they're going to give me 100,000 as my net pay, then it's the employer's responsibility now to see how much do they manage the statutories on the other side. So you secure your net pay, and then the gross pay now the employer will have to deal with that. But for employees, you have very little room to maneuver what statutories you have to pay the government, because they are stipulated in the law, in the Tax Procedures Act, and there's nothing much you can do about it, because the employer has to deduct and give you your final pay.
That's a very good insight for those who are going to negotiate their salaries.
Correct.
I think now you know what to negotiate. Think about the taxes and everything and what you're going to ask.
Something that I wanted to add, Joanne, is the government came up with a different tax rate for those earning above 500,000, and maybe something that we need to talk about maybe another episode. But what happens is, if your salary jumps from, say, 500,000, 550,000, then your tax rate now jumps from the initial average of 30%, that is for those below 500,000, to 35%. So if you are to look at it, if you have to evaluate your tax burden, if your salary was to move from 500 to maybe 550,000, then you need to look at the net effect of that in your net in your net pay. I know we have a page where you do that calculation. So sometimes, as an employee, your employer might increase your salary, say from 500 550, but your net pay goes down. So that is something that I think employees need to check, especially the senior level employees. Maybe sometimes it is safer not to accept the salary increase, but maybe go for maybe other ways of employee compensation, other benefits, yes, so to speak, so that your salary doesn't go down once you effect the statutories.
Okay, that's a very good insight, because most of the people will just negotiate on the increase.
Correct.
Not considering how it is going to affect them in terms of taxes.
Thank you.
Yes. What I can say is tax is the one thing we all love to hate. Because
correct. It takes from us. It takes from us.
It takes from us, yeah.
Correct.
To negotiate for the tax.
Agree with.
Yeah. So how you as a business, as a consultancy firm, into the audit firm and financial, into the audit society and into the financial market, how do you come in and help the employees? Because you've already given us insights of the employees, how do you help the employee?
Yes, that's a very good question, Joanne. Remember, payroll expense is an expense in the profit and loss. Let me use that jargon now. The profit and loss is just the profit, the statement of incomes and expenditure for a company. So it is one of the biggest expense in every revenue statement for a corporate. So the way we help corporates is, number one, we'll go and audit or interrogate their payroll, just to see which are the areas that they can save in. How do they structure their pay to all their employees, so that they not only save on their total payroll value, but they also save the employee on their net take home. With the several statutories that government has bring into space, it is very important for employers to see how to grade or how to reward the employees without affecting their net pay. Remember, initially, John, let me just give you an example, because that's a big area that we'll need to talk about. Initially, most companies would want to give you what we call a transport allowance. That transport allowance is supposed to assist you to move from point A to point B in the course of your working environment, your working time. But remember, that transport allowance, the taxman taxes it, assumes an income to you, and then taxes the same as any other emolument that you are getting. The way we look at it is that this is a reimbursement that you are given to be able to carry out your day-to-day activity. So instead of calling it a transport allowance that is taxable, then we can call it a transport reimbursement that is not taxable. Number two, we talk about communication allowance, what we used to call airtime allowance. Initially, or the way the taxman looks at it is such that is a taxable allowance. Therefore, they add it back to your pay, and then taxes the entire amount. But what happens is, this is an amount that your employer gives you so that you're able to communicate to XYZ clients. Is it in the course of your day-to-day operation? So the way you look at it as a consulting or a consultancy is that this should be paid to you as a reimbursement, a call or a communication reimbursement. So you'll use whatever amount you have used in the course of the month, and then your employer reimburses you, so that you're not taxed on it. What I'm trying to build, Joanne, is that employers now need to interrogate their payroll, one item after the other, to be able to see where can they save their total payroll expense. That is number one. And then number two, where can they save on, where can they save the employee from the net amount that is payable to KRA. What we are not saying is that is for employers to evade tax, because that is a criminal offense. But if you read the Tax Procedures Act, it is very clear what is taxable and what is not taxable. So can you
tell us, because you've talked about the transport allowance, communication allowance, in terms of allowances that are me as an employer, as an employee gets, that is my commissions. Let's say the salespeople, my commissions, my per diems. Tell us what is taxable and what is not taxable.
Thank you, Joanne. You are talking about commissions, right?
Yeah.
And per diems, yes. Commissions are taxable, unfortunately. So any commission that you earn from your employer are taxable. So they'll add it back to your salary, and the taxman has to tax them. But that can be flipped. If I was an employee and I'm earning quite some good commissions, maybe I can ask my employer to pay me part of that commission in or in cash that goes into my pay slip, and maybe some of it they can pay me in terms of employee share scheme, where maybe I get a part of the company, I become a shareholder of the company from my commission. Remember, if I was given, say, 10 or 20 shares worth XYZ amount of money, then that is not taxable. That's not taxable. But if that amount is loaded into my payslip, then it becomes taxable. Let me come to per diem. Per diem, there's a maximum that the government allows, or that Kenya Revenue Authority allows. I'm not sure about the figure, but that just meant the last time I checked the Tax Procedures Act, it was 2,000 per person per day. So anything above 2,000 is taxable, but anything below that is not taxable. Sometimes employers don't distinguish the two. For example, if your employer pays you, say, 5,000 per day, then they'll tax the entire 5,000. They don't distinguish between what is taxable and what is not taxable. So maybe something that employees need to interrogate further and say, out of the 10,000 that was paid, how much goes into tax and how much is not taxable. I know most employees disposable incomes, ama ile pesa tunapeleka nyumbani imepunguka kabisa. So it is good for employees just to check their pay slips and see what is taxable and what is not taxable. And that is that's what this conversation is all about.
Yeah, because we are focused more on the employees and what is taxable. Let's now see, as personal as the employee, I will go tell them management this is how I want my commission this is now. How does that affect the business? Is the business going to have a loss? Are they saving something? Yeah, how does that benefit the company?
Let me put it this way, and let me start with commissions. Remember, commissions are paid from a value that you're given the company. Yeah. Companies that don't pay you commissions for nothing done. They'll tell you that we are going to pay you, say, 10,000 for every 1 million shillings sold, or we are going to pay you 100,000 for every 10 million shillings sold. And in their calculations of commission, they know that if a salesperson has brought in value of 10 million, then our profit is, say, 2 million. Of the 2 million, we can pay our employee 100,000. So then they have made their calculation, and in that commission calculation, they know they have made their income. Now it is the employee now to see, out of the 100,000 that my employer is going to pay me as commission, what is my net take home, and how can I increase that net take home at the end of the day. And that is why you are saying that you can decide to maybe a half of it you can be paid in your pay slip for that month, but the other half goes into your shares. Or the other option that you can use that's not taxable is that money can be channeled into your retirement benefits contribution, as long as it is registered. So when that money goes there, it is not taxed. Remember, you are saving. You're saving in a kitty that is not taxed. But if you have to get the full amount in your pay slips, then the government takes a percentage of it.
For the sales people, I think this is a free advice. You're not paying for, so please share it with your colleagues.
Correct. Thank you.
Okay, that is a very nice insight. Can they also probably do it into the vouchers? See the supermarket vouchers. Is it allowed, or it's also taxable?
It is allowed, but as long as it is a commission, then still the employer has to pay a tax on it. The only time it is not taxed if it is given to you as a gift. So, for example, at the end of the year, because of your hard work, we give you, say, a gift voucher of 50,000. When you call it a gift, then it is not taxable. But if, as long as it is called a commission, then it is taxable.
When you say a gift, the company is giving you a gift. So that's going to be a date on their side because it's going to be deducted now from their side.
Correct. Thank you, John. For I think let me just mention that when the company gives rewards you that amount of money as a gift, then it plays to your advantage as the employee because the gift is not taxable, but also on the employer side, it is a deductible expense when it comes to their tax calculation then at the end of the year.
So that is free advice we are giving you. So please make use of it. So we have addressed the biggest issues into the business in terms of taxation. And most people have a lot of myths about auditors and what audit service brings into the company. Maybe you could clarify that. Us as the auditors, you have hired us, we're coming to do an audit for your company. So what value do we bring? What services do we bring? What are we here for? Yeah.
I'll put it very briefly, not so extensively, John, because audit is a big area. You see, as a business owner, you always want to know how your business is doing at the end of a given period. It is like your car. When you're driving your car, you must take it for service every so often, so that the mechanic will tell you your car has this, and that as problem, so we need to fix A, B, C, D. That is the function of an audit. So at the end of, say, 3 months, 6 months, or even 1 year, auditors will come into your business and check what you've done for the last 3 months, for the last 6 months, the last 1 year, and tell you that from our review of your records, you've made, say, 10,000 in sales, you have spent, say, 8,000 in your total expense, therefore you have profit of 2,000. Or on the flip side, you made sales of 8,000 and you spent 10,000, therefore you made a loss of over 2,000. Without that information, Joan, then you can operate your business for some time, and then one morning you wake up and you're told that there's no money to run your business. What has happened is that your business has gone out as losses. Remember, we have had companies that have gone under in our country, especially in Kenya. I can give you the example of the most recent example we had. Nakumatt supermarket. Remember, we had Tusky supermarket. They didn't go under because they lacked money. They went under because they didn't manage their finances properly. Remember the story of Tuskys, that they reached a point where they could not be able to pay their suppliers. Why were they not able to pay their suppliers when their business was that thriving? Meaning that money came, but they didn't know how it went out. So it went out into non-core business avenues. Meaning it went out into this avenue, so it didn't come back to business. Audit will point to you and tell you that you are making sales. Yes, you made sales of, say, 2, 3, and 4 billion. This is the amount that you made as profit, and therefore, if you made this profit, then you need to retain this amount of money to be able to expand your business. That is number one. Number two.
We can basically say the problem starts from inside.
Correct.
It's an internal problem.
Correct.
Okay. So when it's an internal problem, so you as auditors, you come in to show them where did this money go to?
Correct. Number two, Joan, the taxman will every now and again come and tell you that we need to see your records so that we see how much, if you have paid the correct amount of taxes. And normally the first record that they want to see is your audited report for a given financial period. Your audited report will give the taxman the amount of money you reported as profits for any particular period. If you didn't do an audit for a period, then what the taxman will do is that they'll come and do their own audit. And of course, when they come doing their own audit, you know your guess as mine what they'll assess. They want to get as much as possible from your business. So the onus is on you to do your own audit, so that by the time the taxman is coming, you have your records clear and you can explain to them that this is what I made and this is what I spent. Therefore, my profit is this about this is what I paid your taxes, our taxes on. Number 3, Joanne, there are those people we call shareholders. Shareholders invest in a business to get a return. I know most businesses in Kenya are family owned or individual owned. But if you are to grow to a certain level, Joanne, then you must be able to attract shareholders from all over the world. Let me put it that way. Shareholders will only invest in your business if they expect that they'll get dividends from that business at the end of a given period. And how do you determine the amount of dividends that you're paying to shareholders? It is from the audited report that says that this period we made XYZ amount of money, and we are going to pay, say, 40% of that profit as dividends to our shareholders. So the shareholders would want to see your audited reports for that particular period, for them to know how much they're going to take back as investors, as dividend back to them. So stakeholders in your business would want to see your financial report. The other aspect, or the other people that are interested in seeing your audited report, are your employees. Why? Because they want to see that we have entrusted our time to this corporate. Are they doing well? Are they a safe space to be in? Are they people we can have trust in? So they want to see your audited report so that they know that, one, the company is strong. Two, the company is making money, because it is from the profit that you make that you're able to pay your employees, or even the bonuses that you pay at the end of the day. So all the stakeholders would want to see your financial records, and not to forget your suppliers. They'd want to see a healthy.
Can these people pay us?
Payers, yes, correct. You get it. Can these people pay us? If we supply them with this fixed amount of supplies, can they pay us in the shortest period of time possible? So all stakeholders in a business want to see an audited report, and that is the only way you can grow as a business.
Okay, when you say stakeholders, let's just go back to there. Do you also involve donors, for example, in NGOs? Are they part of the stakeholders? And okay, what happens in the NGO?
Thank you, Joanne. For NGO now, it is even more strict, because if you're an NGO and you want to attract donor funding, the first thing they'll ask you is your last 3 years audited report, so that they see that if you say you are dealing with malnutrition in, say, Kenya, how have you managed that over the last 3 years, so that you now say you require maybe 100,000 in terms of donor funding. So they'd want to see your previous records. And then once they fund you, they'd want to see how did you use their money. Was that money channeled into the areas that you said you're going to channel it to? So they'll not only require you to show your annual audited reports as an organization, but they also want to see the project report for the project that they were funding. If they're funding malnutrition, they'd want to see how much eventually went into the children that you said you wanted to support, and what is the impact of their intervention on the ground. So they'll see what we call a project audited report. But they not only want to see that, they'll also want to see what we call an M&E report that now goes even beyond the audited report and sees the impact of the intervention on the eventual recipients of that donor funding.
Okay, because for them, I don't think they really getting their
correct.
So it is more on following up and where the investment went, or where the money went. Also, you say that me as an employee, I will need to see the financials of the company. So how do they ask for them? Is it allowed, of course, into the corporate world, into other businesses? And how can someone approach the employee when it comes to such a situation?
For public companies, it is allowed. By public companies, I mean those companies that are quoted at the stock exchanges. And for our case in Kenya, Nairobi Stock Exchange. In fact, for public companies, you don't request. You just need to go to the company's website. You'll find those reports there. So you don't need to request anybody. Just log into the website and you'll find, because it's a requirement by the Capital Markets Authority that they must publish their financial statements at the end of every financial year. For private companies, it might be tricky because remember, these are individual corporate.
Yeah.
So maybe when you go snooping so hard, then your employer might question you and say, what is it that you're looking at? Where exactly? It might be a challenge, but at a certain level, say for example, if you're the finance director, you're the human resources director, then you can request for that, because that is how again you're appraised based on what the company has made at the end of the year. But most companies, especially in a market like ours, which is Kenya, you'll find even private companies publish their financial records. So when you just need to know how to ask, you'll get those reports.
So you said auditing happens after every financial year.
Correct.
So that means every year a company, personally if I have a company, I must do audit for me to see where and how far my business is going, how profitable, or how does it, where is the impact into the profit for the business?
The audit is what will tell you whether you've made a profit or a loss for a particular year. If you've made a profit, then now it's from that profit that you're supposed to pay your taxes. I see it's from that profit that you're supposed to pay yourself, even as a business owner, so to speak. It's from that profit that maybe you can pay your other investors. But if you made a loss and you still go ahead and say pay dividends, because there are companies that have made losses but still paid dividends. Yeah. Remember, you are paying this from the capital of the company, meaning you are eroding the capital of that company. Yeah. So if you did that in year 1, you did that in year 2, you did that in year 3, and then year 4, you might find yourself running out of liquidity or of cash flows to be able to run that business effectively. So audit comes into play just to tell you, it is a compass that tells you that you are headed in the right direction or you are headed in the wrong direction. If you're headed in the wrong direction, then the onus is on you as the business owner to change course and head towards the right direction. Or it will tell you you're heading in the right direction but not at a good pace. So you need to increase your pace so that you reach the destination as fast as possible.
So to our viewers, I think this is a very nice insight, especially to business owners, because you might be investing in the wrong thing, or something might be happening in the business and you have no idea. At the later end, at the end of the year, you come to find out there's nothing going on.
Correct.
The business is going to shut down. So that is a very good insight that George has shared with us. So George, we have talked about auditing, we have talked about taxes. What is this people call compliance? When people say we do auditing and compliance, what is compliance?
Compliance is quite extensive and it's industry per industry. Let me start with the industry that is heavily regulated. That is the banking industry. You know, the banking industry is regulated by the central bank. Across the world, all commercial banks are regulated by the central bank. And central bank, through what we call their prudential guidelines, or they'll send you a set of rules that you must abide by if you're to operate in that jurisdiction as a commercial bank. And they'll need you to give them reports almost on a monthly basis on the key parameters that they have set as their prudential guidelines. So a compliance department or a compliance officer in a commercial bank will have to check and see that have we complied with the central bank guidelines. And then number 2, when we do our audit at the end of the year, we will point out to an organization where we think they are weak, where their weak points, or what we call lapses in audit. An organization will have to look at that report and just try and see how are they complying with those audit recommendations during the course of the year, so that come next year, those same issues are not picked. Another industry that I'd want to pick is the airline industry.
Yeah.
That is also heavily regulated because of the nature of their business. So a compliance officer would want to see how their company is complying with a set of rules from, say, IATA, because if they don't comply, then their license can be withdrawn. That is how serious it is. Because if you don't comply, then your license is withdrawn. If your license is withdrawn, then you're not able to do business in that particular industry. So a compliance officer in that industry would want to check and see how best the organization is complying with those IATA guidelines. The other industry that I'd want to mention is the medical industry. Remember, in the medical industry, you're dealing with lives, is it? Therefore, compliance is very key. From the way you manage your waste, the way you manage your testing programs, the way you manage your wards, it has to follow a certain set code of conduct. If you deviate from that, then you have problems. You've seen the hospitals in this country that have closed, not because they're not making money, but because they deviated from the set code of conduct that the industry requires. So those are the industries that I must say, that must comply with given set code of conduct. Maybe the last that I can mention is our flower industry. I know Kenya is very big in the flower industry. Remember, they sell these flowers in the EU market, in the Far East, in the West, that is the US, and those markets, they are set guidelines or set quality control measures that they put in place. So therefore, as a compliance officer in that industry, you have to ensure that your company follows that. Otherwise, you can produce your flowers, do everything, but when they go to your end market, they're rejected, and that whole consignment is a loss to you.
Yes. So you as AMG and as an audit firm and compliance firm, how do you come in and help such businesses? What do you do to them? Yeah, what is the value?
What we will do is, Johan, if, for example, we walked into a commercial bank, because that is an area that we are very heavy in, especially in the other jurisdictions that we audit, we'll go and just check how best they're complying with the set guidelines from the central bank in that country, and advise them on any areas of lapses that need to improve on. So we will pick the set prudential guidelines for that particular country and just test them against what that particular commercial bank is doing, and point to them that the prudential guideline is pointing this, but you have done this, so you need to improve on this. So when we go to an industry, because compliance differs from one industry to the other, so we look at the standard code of conduct for that industry and test the organization's policies and SOPs, standard operating procedures, against those set standards, and see if there are any lapses. If there are any lapses, then we report that to management and ensure or follow up to ensure that there is follow up, or those areas of lapses are rectified.
So you come in, basically what I've gotten from your conversation, you come in and fill in the gap of risk management.
Correct.
Personally, I think risk management is broad. So does it also involve tax and advising people into different tax changes? Because tax changes after every now and then. So do you also, when you jump into that gap, the risk management gap, do you also advise them on the taxes, on how to go about it, and the new changes and trends? Or what happens?
Risk management is now a broader aspect over and above compliance. Remember, compliance is more internal. You're testing internal systems vis-a-vis the set standards, is it? But risk management is broad, because it looks at the survival of a company in a given market space. So we are testing this company vis-a-vis the external forces that can harm this company. So there's something we call enterprise-wide risk. For example, if you are auditing a company in the banking industry, we look at that industry in total in that particular country and see what are the specific risks that this industry faces for that particular period. Are they political risks? Are they interest risks? Are they market risks? And then test the company how easy or how they prepare themselves to be able to adapt or be able to manage those risks that doesn't affect them negatively. I'll give you an example of the COVID period. Remember the COVID season that companies were essentially told to shut down for years, that people were not supposed to go into a shared spaces.
Yes.
So if a company had not prepared the systems to be able to allow employees to say work from home, then you'll find that to be a market risk at that particular time. So there's something that we call market preparedness. So that if something like that were to happen, how are you prepared as a company to be able to face such a risk and be able to navigate through that risk effectively? Number two, Joanne, especially in our country, Kenya, we normally have political risks every 5 years because of our election cycle. Yes. So if a company, if you are facing an election, then you go and test a company's preparedness to those political risks. How much are they exposed, and how do they manage that risk? Remember, most of these risks sometimes are external to the company, so they can only be able to prepare as much for them to be able to navigate that particular risk. So how we get in is when you go into a company, because of our audit, we'll do a risk profiling or a risk matrix that profiles the risk that this company faces vis-a-vis the market and how they can manage that effectively going into the future.
I think for the businesses right now, you have an idea what happens when it comes to the risk management gap. And soon as we are going into the election period, soon enough, of course, I think businesses should now start preparing on what will happen. If something was to go on, if they are going to close the business or they are ready. So the businesses, I think, should start looking for auditors to do that.
Thank you.
Yeah. So that was basically the question. You guys come in and fill in the risk management gap. Now, I also asked about the tax and the tax credit.
Correct.
Because they change once in a while, every time. As a business person, I am not sure if I can keep up with that. So how do you come in and how do you help us do?
I think for tax, we handle it in two levels. One is tax planning. We tax plan for you and just tell you these are the taxes you're supposed to pay. How do you manage them as efficiently as possible so that you don't pay a shilling less or a shilling more to Caesar? And by Caesar, in this case, we know it is the revenue authority. But also, sometimes it happens that KRA will still want to come and audit you as a business to see, did you declare the correct amount of taxes to them? So we come in and assist you during that audit, or that tax audit period, just to be able to sort out your records, so that the revenue authority can see clearly what you're trying to report to them. Remember, the taxman would want to see your bungalow as a mansion, is it? So when they see your business, they think they can get as much as possible from you. But from your perspective, you want to pay the least amount of money to the carrier. So it is us who bridge that gap, so that the taxman takes the rightful share, and you also don't lose to the taxman.
I think we can wrap it up now because you've shared a lot of insights.
Thank you.
Which are very useful to both the employees and the employers. Maybe you can wrap it up with us with a piece of advice to the employees or someone who is looking to open a business soon. Yeah.
Thank you, John. I think for employees, this is the right time now to start looking at your payslip and just interrogate it, because disposable incomes have seriously gone down. So anything that can add a shilling or two into your payslip is a welcome idea to any person who is going into employment. And then currently, if you're moving from maybe one employer to the other, then you need to look at, you need to negotiate on the net pay, not on the gross pay, because gross pay currently has become a challenge because government keeps on introducing one tax tax after the other. To the employers, it is high time that all employers, ourselves included, need to audit our total payroll expense and see where can we manage that expense in line with the Tax Procedures Act that covers income tax on employees. So you balance between the total payroll expense vis-a-vis what you give your employees at the end of the month. Yes.
Okay. Thank you for the free advice.
Thank you very much.
Personally, as a business person, maybe I want to reach out to you, or maybe I want to get more insights about AMG and get support from you. Where can we reach you?
We are present on digital space quite heavily, but you can reach us on our mobile numbers. That is we have 0715 if I can remember. 536 820 0715 536 820. That is our telephone lines in Kenya. In South Sudan, we are at +211 is the country code for South Sudan. +211 922 652 092, and then our email address is info@amgconsulting-group.com. info@amgconsulting-group.com. You can post your questions there. We'll be willing to answer your questions at any time of the day.
And where can they visit us?
Thank you, John, for that question. In Nairobi, our offices are at Lower Hill Office Duplex. Lower Hill Office Duplex is on Upper Hill, just next to UAP Towers. It is sandwiched between Hill Park Hotel and Has Plaza. Opposite DIB Commercial Bank head office. In South Sudan, we are at Allied House. Allied House is on off Airport Road, a place called Hai Mata.
All right. I think you all know where you can reach us, our guest us, if you need to follow up on more. Thank you so much for sharing the insights on the financial matters.
Thank you.
That will definitely contribute positively to the business. And for our viewers, subscribe also, and be on the lookout for our next video. It might be on payroll. Let me just give them a hint.
Thank you.
Because that is the one thing we have discussed. You've just
extensively. Yes.
But we need to get into details with this for the employers also. Yeah, thank you so much, and looking forward to our next video.
Thank you. Something, John, that I must mention is that we have an HR management system that manages your every company's HR process as efficiently as possible. You will not have to deal with these HR issues that come with managing employees or the payroll as it were, so that your HR function is as efficient as possible. The system is called Mara HRM. When you just type Mara HRM, you'll find the URL there. You can reach out to us just to take you through that system. Thank you, Johan.
You're welcome. Thank you so much for that.